Hello everyone, and welcome to, for us, the second webinar of the day. I know some of you will be with us this morning when we looked at the forex market coming into the London session, so welcome again. I know others of you are joining us for the first time in the trading day, and some of you I think are joining us for the very first time ever. But into whichever category you fit, you are all very, very welcome. And before we start, as always, may I draw your attention to the disclaimer that I know you can see on your screen, because I can see it on David's screen. And as you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So I'm just going to take this down and move it out of the way very, very quickly. Right, we are going to be going over to the indices and seeing basically what is happening in the markets, regardless of what you've been trading over the last few days. It's just been one of those weeks where I think the market is really trying to decide what's going on. It's reacting to news about the trade talks, or the trade talks, the deal that is or isn't going to happen. There's a lot of flip-flopping about, and at the same time, markets, because we're coming towards the end of the year, they like to keep a nice positive spin on things. Fund managers have reports to write, etc., etc. They just want to maintain, the nice bullish sentiment that we have been seeing. Now, you also have to remember what happened last year at this time. It had once after December, when the Fed and the interest rate decision, they took an almighty dive going into Christmas Eve. But if you look at the candle on the month on last December, it actually ended with a huge tail at the bottom. There was a lot of buying before the end of the year, and in fact, if you look at the January candle, that was an inside day, and up it went from there. And talking about candles with wicks on them, this is actually from the MT5, my MT5 platform. Now it is a currency pair. It's the pound Aussie, which we talked about this morning, and there is a recording of this morning's session. So if you want to catch up on what I said about that and the price action that we were looking at the time, it's up on my YouTube channel and the quantum trading channel as well. But the reason I have it up at the moment is because this morning we're talking about candles, candle patterns, and obviously volume price analysis. Volume price analysis is the methodology that David and I have employed over the last 20 odd years in both trading and investing. And I think the best thing I can do is actually show you, I took a screenshot this morning. This was actually the profile, and the reason I've highlighted these three areas, first of all, this is multiple time frames. So I have the hour, I have the 12-minute, and I have the 3-minute chart. And over here on the left, I have a Renko chart, which is a non-time based chart. And this is one of my preferred combination of time frames that I like to use. Now, this morning, we have an indicator as part of the quantum package that we call the currency strength indicator. And basically, it's a bit of a misnomer in a way, because what it does, it disassembles the currency pairs into their individual currencies. And what we see on the indicator, in fact, if I show you, it'll be much easier. It actually shows you what's being bought and what's being sold at any particular time. I've actually just highlighted the British pound. This was the sharp move higher that we've had from this morning. The blue line is the Aussie dollar, and the purple line is the Canadian. We've got something to say about the Canadian because that was being quite heavily sold this morning, particularly against the British pound, as it turned out to be. But there's been a complete reversal, primarily because of what the governor has been saying. I think from what he's been saying, the indication is that there aren't going to be any more interest rate cuts. So the loonie is going to, so that's been taken as a buy by the market. So what this indicator does, it tells us, first of all, what's being bought, what's being sold, heavily bought, heavily sold. Is it reaching a point, as it is here, overbought or oversold? But more importantly, what the indicator also tells us is when the lines are moving in the same direction, we are looking at a period of congestion. In other words, sideways movement, you know, no firm direction one way or another, which is what we had on the pound Aussie. Now, the reason I like the pound Aussie, I traded a lot. It produces, when it moves, it produces some fantastic moves, sometimes in the region of 80, 90, over 100 pips in one session. And what it can then do is, when there's a crossover into, say, the US session, you could have a total reversal and you can still pick up maybe 40, 50 pips later on in the day. So it really can be a very, very profitable pair. But consolidation, sideways price action. And what we had here, we had the sideways price action on the Renko. The Renko, as I said, is non-time based. It's purely based on pip value for the little brick that we see here. And I think I had it this morning set at 3 pips. All you can see is just chopping about, no firm direction. But we know there's no firm direction because if we look at the time charts here, the 3-minute and the 12, we have this yellow line here, which is what we call the volume point of control. It's the point on the chart where there is, it's the fulcrum. It's kind of in balance. In market profile parlance, it is fair value. The market has decided that for whatever reason, there is no divergence. There is no firm direction one way or another. These are very, very tricky market conditions to trade. We talked about market conditions, chart conditions. What are we facing? And this is what I was facing this morning. So we have the 3-minute going sideways. This was also supported by the 12-minute chart. So unless I was going to trade something like the 10-second chart maybe, or a 1 pip value Renko, and assuming I could get a fill off an MT5 chart, that, you know, you could take perhaps a very, very small move in one direction or another, but you can see by the number of times the price action goes back to within, if you like, the comfort of the volume point of control. It didn't go very far. Lots of fake outs, lots of you know, attempts to break away, but eventually, but it's stubbornly around the volume point of control. Now, on the hourly chart, the volume point of control hadn't actually moved. It wasn't in the same price area. It was still pretty much sitting down here where it had been in the previous 2 or 3 days. But what was interesting about the consolidation phase of the candles on the hourly chart was, if you look at them, and I hope you can see them beyond the highlighter here, is you will see that the number of candles that have wicks to the bottom. And what is that telling us? It is telling us there is price support coming in. Although it's moving sideways, possibly what the slower time frame chart is telling us is that, yep, if there is going to be a move away from the VPOC that we can see here on the faster time frames, the hourly chart is suggesting, because of the candle patterns and the volume that's going in underneath the candles with the wicks, potentially it could be to the upside. So what do we have to do? And this is what we have to do. So if we look at the same 4 charts having moved, you know, a few hours from this morning, this is what I was actually waiting. This is where the VPOC was this morning. It has now moved up here, and in fact we have had a sort of a little bit of an attempt to break away. It was actually an actionable, a potential trade. No, not a huge amount by the standard of the pound Aussie, but more importantly, what happens now is the volume point of control, where you have volume, time, and price, also acts as a cushion, as potential support. We've had a pullback, of course we have, because if we go back to our CSI, what can we see? We can see the pound has turned down, so there is selling of the pound in the market. But look at what's happening to the Aussie. The Aussie has also turned down. What is that telling us? That that is going to be in congestion on the hourly chart for a little while. So we can, it kind of gives us a little bit of assurance, reassurance, but it also explains why the price action is doing what it is doing in the faster time frames. And the actual entry for the move to the upside is simply this. You simply take, it's very, very straightforward. You can see here this flip-flopping of colors in the congestion phase, lots of changes of the trend dots to blue, gray, and then red. But here, when you have a clear break of consistent blue, blue also on the trend monitor, then it's you possibly wait for a significant support and resistance. Not so much that one, maybe this one, but looking at the time chart, always use it together with the time chart. In fact, it was the break at this point here, 90.15, and then you can see the volume coming in, a little bit of volatility in the trend higher because you've got spikes to the wicks to the top and bottom of the candles, but it is still a tradable trend. Now, it looks like that is actually breaking down, but we shall see how far that is going to go. We've still got the VPOC here, excuse me, on the hourly chart. Yes, it could certainly come lower, but let's see if there's any buying that comes under that candle. So it's multiple time frames, a non-time based chart, looking at the structure of the chart across the time frames, waiting almost as if, not so much that everything is necessarily in alignment in the sense of, everything has to be perfect on all the time frames, but understanding that, these sideways price consolidation phases, if you understand how they are likely to play out in the multiple time frames, you shouldn't have any problem developing a tactic that will allow you to take advantage. So that is, if you like, what I use a break. Some people use a breakaway, breakout strategy. It's not really that. It's really leveraging what the chart is telling you and adapting the trading tactic accordingly. That's one way of doing it. Also, what it also does is, in this way, you also have natural regions where you place your stop loss, and you also have regions based on support and resistance, both from volume, price and time, and traditional price support and resistance, where the price is likely to be heading next. And we can see here, as I said, the VPOC, it will play its part. You'll always get a little bit of an overshoot on things. These lines that you see on your charts, they're not, they're not rods of iron. You have to allow a little bit of flexibility on them. But if there is a break lower, and this breaks lower on the hourly, and this breaks lower on the 2 faster chart, we just take the break. Just because that is support there, that's, that support is there, it's meant to be broken. Right, we're going to pass over to David. He's going to talk more about even more reversal trading on this one, David, your tactics. Possibly, and I have to say, on occasions, depending on what I'm trying to say here is, as a trader, we all like to develop our own particular set of trading tactics, trading strategies. It's what we feel comfortable with. We look at charts and we learn to recognize certain patterns. We know certain patterns suit us. We think, oh yeah, I like to see, maybe, I don't know, I like hammers, shooting stars, whatever it is you put together. That's fine. That's absolutely fine. But you also have to recognize that sometimes what you like to trade, the market may not deliver. So you either have to say, okay, look at it another way, look at the market, look at the charts and say, well, what is the market doing today? What is it telling me? What is today's narrative? What's driving this narrative? How is that being reflected on the chart? Am I going to get lots of volatility? Volatility gives momentum. That has a knock-on effect on the amount of risk that you can put on, that perhaps you should be putting on the table. Maybe you shouldn't put so much. Is the market complacent? And once you develop a knowledge and understanding of what the condition that the market is in and the chart, then you can say, okay, well, what is the best way to trade that chart? And the pound Aussie was just a perfect example of where you had this sideways price action. First of all, patience, waiting for, if you like, this lineup across the multiple time frames, and then taking the opportunity, when we did finally have some divergence. And I think looking at the CSI, the currency strength indicator, I think possibly the pound Canadian Nice trade this morning. It was the strongest pair, and there's been a really very nice reversal trade. And if you want to have a look at it on the on Ninja Trader, we'll pass over to David. Moving to the general markets, basically the S&P is down slightly, the Dow is down, the future Nasdaq is down. All to do with China. What I strongly recommend is, it's so difficult to try and keep up with the machinations that are going on between the US and China. Well, Trump basically, says one thing, does another, and you never know what's going to come out of his mouth. Sometimes I think he doesn't know either. But anyway, and it's this, we live in an uncertain environment as traders. But it's, this uncertainty has been ramped up considerably by what is going on in the background. So do get yourself access to some news that is, if you can't afford to pay for a feed, I don't know, at least find somewhere that's not too delayed. I think CNBC is not too bad, and if your broker offers you some kind of news feed, then just do take it and just just watch it. Don't become obsessed with it, but particularly the market is going to react when China says something, Trump says something. It's just the way things are at the moment. So I'm going to pass over to David. I think all the news is out for the rest of the day. Yep, that's it. So we'll see. Probably going to be more trade news, basically. If you have any questions, before I forget, please just do put them into the chat box on anything I've said, or the indicators that we are showing here. And very, very quickly, those of you who may not have come across them before, I know we have some of our quantum users in the room, and some of you have already bought the forex program that David and I have put together. But basically, quantumtrading.com is where you will find all the information, pricing on the indicators that are shown on the chart. Those are the platforms that are available at the moment, but we are working on TradeStation, and I think David has some TradeStation charts that he's actually using it for the indices. Yeah. Yep, fine. I think he's got some commodities as well. I use MT5. I do have a TradeStation. Well, I will have a TradeStation account again. I had one, I closed it, but now I've opened a new one recently, so I will be using TradeStation as well. So can I move over to you now, darling? Yeah, sure. Is that okay? Fine.
Hello everyone, very warm welcome. Good to see you. Just show my screen so you can see it coming up there. Just have a look over my shoulder. Yep, there's up on Anna's, so I'm hoping it's up on yours and hoping you can hear me. Good to have you here. I thought we'd just start a little bit differently today, because I've actually got gold up. I've also got my eye on several other things as well, not least of all the indices, which I've got on another screen. I've actually got that on TradeStation. I've got the CBOE VIX as well. Just keep an eye on what's going on there, and so on and so forth. There's a lot going on. The reason I've got this up is because I just want to pop this up because it just highlights one of the issues that is really a fundamental part of deciding whether you're going to get in or not. This is us 15:10, so this is about 20 minutes ago. This is what I was watching as we opened up the webinar. And I had this on live, and I was just tracking this, and I could see a reversal coming in. And what it actually tells you is, first of all, the sort of trader that you want to be. Are you, as Anna was saying, do you want to be a reversal trader? Do you like jumping on existing trends? What are you hunting out all the time? Personally, I'm always looking for reversals, particularly within the forex world, but I also look for them on any other chart I can find. And one of the classic ones is where you get 2-bar reversals, which isn't really what I wanted to say, but it just highlights the fact that you've got this 2-bar reversal here. You had, first of all, in the downside, the move started to develop and it looked reasonably strong. We then had the volatility trigger, which is always it's an alarm bell. It tells me that this is moved outside the average true range. This is too wide. The big operators, this is on futures, so the big operators are stepping in here. We've got 1.5 tons of volume coming in. And bear in mind this triggers in real time. So as soon as you see this, it raises a warning flag that expect congestion, expect reversals, don't expect the market just to carry on in the same direction nice and easily. It probably won't, largely because these are classic opportunities for traps, because when the market's moving fast, if you haven't got in here too early, breaking through this level here, if you haven't got in up here, this is the point at which the Johnny-come-latelys will jump in, because the market suddenly picked up speed, it's moving very rapidly, they don't want to miss out, so they all jump in and they all get trapped. It's a very simple trap. I mean, let's face it, if you were a market maker or a big operator and had control of a market, you would do exactly the same thing because it's so simple. You then get the follow through, but you also get this 2-bar reversal. But the point I wanted to make is this: if you were looking at this as a possible reversal, and once you've got this and you've got that, then that's what you're looking for. You're looking for the opportunity to reverse, to take a long position. And if you look at that on this is on the 5 minutes, so it's not quite double 3 minutes, but it's close enough. That's basically the hammer you're getting. That is the hammer candle, the down thrust, call it what you will, on very good volume. So there's a lot of buying came in under that particular candle, which is why the 2-bar reversal is such a powerful signal. But the point I wanted to make is this, going back to the 3 minute. If you decided that you actually wanted to take a position to the upside, the question you've got to ask yourself is this: given the fact that we've got the volume point of control set up here, given the fact that we've got this enormous amount of potential resistance coming into play, this blue dashed line, by the way, is price-based resistance on the accumulation distribution indicator. So it's looking at the number of times a level has been tested and retested and held, and therefore acts as either very strong support or very strong resistance. And bear in mind at this point, when we're down here looking at this opportunity, we've got the VPOC, and we've got this level, we've got another one here, we've got another one here. So we've got a huge density of a resistance overhead. The question you've then got to ask yourself is, okay, assuming I'm not going to get in here, but maybe I'm going to get in here somewhere, is $3 an ounce potentially enough for me? Because for sure, you can assume that the market at the very least is going to get to this level and it's going to congest. There's no way on the planet that the market is just going to rocket through here and go high, right the way up to 1472 or wherever it's heading. It's almost inevitable that the market will congest at this level for several reasons. First of all, because you've got a ton of volume there. Secondly, because it's a level that the market has congested at before, and therefore it's an important level, and therefore you expect the market to congest. This business is all about anticipation. What do you anticipate the market is going to do? And therefore, the question you've got to ask yourself, if that is the case, is that enough for me to take a trade to the upside? And this could be any chart. It makes absolutely no difference, which is why I wanted to highlight it here. It's a nice opportunity. $3 an ounce on gold is well worth having because it's a big contract, particularly if you're trading the full-size GC contract, which is $100 an ounce. There's a micro MGC, which is $10 an ounce, which is a tenth the size. It doesn't move with the same liquidity because it's not so heavily traded. But basically, that's the question you've got to ask yourself. Whatever you're trading, and it doesn't matter whether you're trading forex or commodities, futures, indices, stocks, whatever, is there enough in that position for me to take a trade? And you know, invariably we got the nice move, good volume under there, and then we get the long-legged doji candles. Now we're into congestion phases, and now we're looking for a potential reversal back down to the downside again. So that's the point I wanted to make. I was just watching it and I thought, you know what, this is not going to go very far. And the question you've got to ask yourself, is that enough? And of course, you look down onto the slower time frames. These are the sort of candles that are developing. Big wick to the upper body, big wick to the upper body. You know, this is not looking strong at all. It's just a minor reversal in what in effect is a longer term bearish trend for gold at the moment. That's the daily chart for gold. That's where we are. We've had the rally, and just checking over on the left hand side, we've also got the dollar rising, which is not particularly encouraging either. This red line, this is the dollar rising very strongly. We've also got the pound selling off strongly. This is the Canadian dollar. We've had a lot of buying of Canadian, and we've also got a bit of selling of euro, which is going on over on the right hand side. So I just wanted to highlight that one. Just head over onto, in fact, what I'll do is, let me just pull this in. This is TradeStation, just for a change of scenery. This is basically the three sisters. So we've got the YM, we've got the NQ, and we've got the ES. So we've got the Dow, the NASDAQ, and the S&P 500. That's what we've been seeing so far today. We've had some decent selling. We're starting to see these reactions coming in all the time. So there's some buying coming into the market. That's on a 5-minute time horizon. I've also got the CBOE VIX up here. This is on multiple time frames, so this is on 2, 5, 10. This is the Renko we're running on the same contract. I've got another 10-minute here. I could change that to 15 just for a change. Let's change that there. There we go. That's on 15. And this is down on the daily. So basically what we're seeing here, we've seen since the open, which is over here at 2:30 our time, the VIX has been climbing, but it's not been climbing particularly dramatically, and we've got these little rallies coming in. We're now starting to see a reversal in the VIX, and as you see these reversals coming in, we had a doji, then we've got deep wick to the upper body there, so we're expecting that to roll over a little bit. There's no volume on this particular chart, which makes it more difficult to read, so just looking at the price action. But that's what we're looking at the moment. So in terms of what's going on in indices, we like to see indices reacting in the opposite way. In other words, as this starts to fall away, if it continues, then we like to see the indices rise and vice versa. Just pop that out the way. I've got some currency futures over there as well. Let's just go back onto I've got the indices here, multiple time frames. Right, sorry, that was the wrong one. Just go over onto the three indices, which I've got set up here. There we go. This is exactly the same thing, but this is on NinjaTrader now. 5-minute across the time frame, and then we've got the daily down at the bottom. We've had gapped up open, which has been down on all three. So it's a little bit bearish. We had some buying. We had a reaction. That was yesterday. We had a reaction about 6:30, I think it was. There was a big sell-off, and then we had the normal souffle effect, or it was an inverse souffle because it rallied rather than rising and falling. This one fell and rose, so it was an inverse souffle, but the principle is exactly the same. When you get the market reacting to these constant statements and war of words that is going on about the trade wars, that is what you're going to see. You're going to see a fast reaction one way, and almost invariably it occurs with a reversal in the opposite direction. So again, it's back to reversals, and it's having the confidence to take those reversals. It's on occasion it's quite difficult to, when you're seeing a market falling quite strongly or rising quite strongly, to actually imagine it going in the other direction. All of that part and parcel is volume price analysis. It's understanding price action and volume. It's also obviously supported by the indicators, which will help. Certainly the trend monitor, for example, would be one of those where you're looking at it for reversal in color to take you out of one sentiment and into the next phase of price sentiment. So that's looking at them across the piece, and on the multiple time frames, I've actually got the NQ set up. We're going to have a look at the tick charts in a minute. This is on 15 seconds. This is very quick. It's a time frame I like particularly myself. I'm not recommending it. I'm just saying it's one that I like to have all the time, purely because it just gives me a very fast view of what is coming up into the minute, the 2-minute, the 5-minute, whatever it is I'm trading. But as I say, I'm not suggesting it's something you should adopt. I'm just suggesting that I'm just posing it as something I use frequently myself as an intraday scalping trader. This is on 2-minute, this is on 5-minute, this is on 15, this is on 60-minute, and this is on the daily. And where we are on the daily doesn't mean there aren't any trades to be taken, but we're trading in this very, very small doji candle at the moment, tight trading range, and it's all the more reason to be down really at the coalface at this very fast time frame. If you have to trade, if you're quite happy to be patient and wait, then you're looking at the slower time frames. You're coming out to 2-minute, 3-minute, 5-minute, 10-minute, and so on and so forth. We go down onto the 15-minute. This was the open at 2:30 our time, 14:30. We get the surge in volume as the cash markets come in alongside Globex. Doesn't invalidate Globex. It just means that all this volume over here is compressed because we've now got a ton of volume as the markets get underway over here. Everything else works in exactly the same way. As you can see, we trade this yellow dashed line is the volume point of control. That is the heaviest concentration of volume. It's where the market is in price agreement. And at the moment, we are trading around that pretty much across the piece. So it's a question of waiting and being patient for those signals to develop, to start to look at, let's just pop that one open, the 15 seconds, to start to look at ranges. Where would you get in if this market breaks as a, let's call it a breakaway trade, And if it does indeed break away from this region, which it will ultimately, because no market will stay stagnating forever, two questions. First of all, what's going to be the barriers to a potential decent move? And secondly, whereabouts are you actually going to consider getting in? If we take the second of those first, if you look at these levels, we've got some decent price levels above. So this is a ceiling of resistance up here. We know we're trading around the volume point of control. We've got some minor levels down here, but we've got some two reversals here, 2-bar reversals on there, some stronger levels down here. We've got lighter volume here. So in terms of break to the downside, once we get through perhaps this region here, 60, maybe 59 or 58, that might be enough. And looking down the chart, have we got enough to deliver? Quite possibly. We've got some minor levels here, although they'll probably come into play. And really it's down to this level here. So you're looking around about the 53, 54. So the question is 60, 59 or 58 to 50, is 4 points enough, basically? That's the question that you've got to ask yourself. If it's going to get that far, is that enough for me? It may be, it may not be. If it's going to break to the upside, we'll have to go up onto a slower time frame chart, break through this region. We've got volume falling away, which is nice. Let's go up onto the 2 minute, see where we are there. In terms of the 2 minute, obviously, if the 15 seconds is going to break higher, then we've only got 5 points before we start to hit the volume point of control on 2 minute. So the probability is that even if the 15-second chart does move to the upside and we grab a few points, we're then going to run into difficulty on the 2 minute, which is going to cause the market to pause. So again, it's a very quick and dirty scalp. If that's your cup of tea, that's fine. But if you're looking for this as a longer term opportunity, just squeeze that down a bit. Then in terms of a more solid move, you may indeed be looking for a move beyond this region here, because once we get through 85, 86, 87, and maybe even get through this region, then once you're out here, you enter clearer water, you've got low volume, you've got very little in the way of price resistance, and you've got some decent points to be made up here. Now, you might argue that, well, if that's the case, you've given up a hell of a lot of points down here, which of course is true, but then you don't know how quickly this is going to move through here. The chances are it won't move through here terribly quickly because you've got so much volume sitting around the place, and you've also got this guy here, which is a pretty strong area of potential resistance overhead. Those are the decisions you have to make. I can't make those for you, but I'm just pointing out the sort of process, if you like, that mentally we would go through every single time we take a trade in the market. That is a sort of decision-making process, and it's nothing to do with risk and reward. I'm just keeping an eye on what's going on. Just pull this over so they can have a look. That's what's going on in terms of the CBO, the VIX at the moment. It's just in congestion, not going anywhere particularly at the moment, not showing strong strength one way or the other. And if you're trading the indices, you have to have something like the VIX around on an intraday, certainly from a scalping perspective at anyway, to give you a heads up in terms of sentiment. Remember, if the VIX is rising, indices will be falling and vice versa. Just see if we can get a move out of the 15 second. Got decent volume rising here under these two. And the other point, of course, is where would you place your stop loss? And for a move to the downside, you'd certainly be looking for a very comfortable level of protection above this region. To the upside, probably a little more tricky. Depends on your level of risk. You might want to set it wider. If it fitted your money management rules, I'd certainly put it below here. But certainly to a downside move, it's fairly straightforward where you put it at 67 or 68, somewhere in that sort of region. Got a little bit of buying coming in under that candle, as you can see, a little bit of buying under the next one, so it's going to push the market back into the VPOC again. Forgive me if you ask questions. I'm in full flow at the moment, but I will answer them if there are any. There are any questions there? I'll just see if Anna's got any questions. No, that's fine. Okay, I'm not ignoring you. It's just I just have to concentrate on what I'm doing at the moment. You can see here we've got falling volume, we've got rising price. That's not a strong signal. and I've said this many times before, if you're new to VPA and you want to learn it, then put it on a fast chart. It's really a great way to learn. It does sharpen you up. Okay, that's just been confirmed. So we have this. This is an anomaly of candles. It's not one-on-one. Normally we're looking at one-on-one. So we're looking at this candle, this volume. We're looking at potentially buying. We've got some buying coming in here. We've got some buying coming in here because it's anomalous. Because if this was selling, it wouldn't. The candle wouldn't be like that. And then we look at groups of candles and volume. We've got falling volume. We've got rising price. So that is not a sign of strength. It's a sign of weakness. Because for a market to rise takes effort, and that applies to individual candles as well as to groups of candles. And the same is true in a falling market. In a falling market, we want to see rising volume. Increasing pressure, rising volume. That's going to drive the market lower. If the volume's falling away, then it isn't. Simple as that. In other words, the selling pressure is diminishing, it's dying away, and therefore the market is not going to go that far. It takes effort for a market to fall, as it does for a market to rise. Trend on this is bright red. You can see it's holding us in for the time being if we're going to take this trade. The VIX is just ticking up. It's gone to 1364, which is a good sign if we're going to jump in. Gone through these minor levels. Well, you wouldn't expect much else. If we get down to this low volume node here, that should move through there pretty quickly. That's a nice wide candle. Little wick to the bottom, but nothing too much to worry about, and good volume associated. So there's nothing anomalous about that. It's just a nice widespread down candle with decent selling under it. VIX is ticking up, 1369.
Can I just pass over 1 second?
Yeah, carrying on down. These are not a lot of points, but it depends if you're trading one contract. A full-blown futures contract for NQ or any of these contracts is worth having. But if you're trading multiples, you're talking big bucks now. And it's also a question of whether you're going to scale in or whether you're scaling out. Are you going in with big contracts to start with, or are you going to scale out from putting a multiple size position on to start with? We've now got some strong buying coming in. We've got a nice widespread candle. Good volume under that candle. Two-bar reversal. See what this is looking like on the slower time frames in inverted commas. Gives a different perspective. Well, we've gone through here, which is going to act as resistance for us now. We've got some nicely gently rising volume. It's not dramatic, but it's certainly rising enough to just confirm the position. See where we are on 5. It's very tight. This is not, this is not a price waterfall where it's literally a question of just jumping in and enjoying the ride. This is hard work. You've got to concentrate. You've got to focus on what you're doing. You've got to read the charts. You've got to see what's going on in related markets and all the rest of it. This is not straightforward. That's what's happening on the VIX at the moment. Same picture on here. This is on 5 minute. Widen that out a bit.
For 1 second and then I'll just...
Yeah. I'm just going to pass over to Anna. Bear with me.
I'm back to my MT5, and I left you when we were talking about the volume point of control on the hourly chart, and I said that this was so this would now provide some support. It did overshoot. We can see here from the wick to the bottom of this candle, but what the wick is also telling us that there is buying in this candle. So it really acted exactly as I had said that it would do. You know, we weren't getting a reversal into a little downtrend. This is what we saw on the VIX, and just really pretty much reinforcing, as I said, multiple time frames. This chart is trading around the volume point of control on the respective charts, and this is what you would expect to see when charts exhibit this kind of structure, which is why it's important that you understand, first of all, is a market or instrument, is it in some sort of trend? Is it a congestion phase? I mean, markets move, I think, broadly in three ways: up, down, and sideways. But in moving up and down, they may move with volatility or not, and even in sideways market, you can have a volatility. And then you have to adapt your trading tactics, or you wait for the chart to be in the setup that you like, and then you take your trade. It's not easy. But as I said, step one is recognizing what it is that you are facing from a technical perspective. And then you have to also understand what you are likely to face from fundamental news, what is going on in geopolitical terms, and the landscape, if you like, the background against which this, you know, the price action is taking part. And that will give you the narrative, if you like, for the day. Right, I'm actually going to stop here, and I'm going to pass you back to David, and I will say we are back next week. Oh, by the way, our daughter did have our granddaughter. She was born very early some Saturday morning, wasn't she, David? It all kicked off. We just about managed to get the webinar. She was a very good girl. She waited until our webinars had been done and the trading week was over, and then she decided to make an appearance. And I'm happy to say mother and baby are doing very well. And she's absolutely gorgeous. And even better, our daughter's actually managing to sleep, which is fantastic. As you know, sleep deprivation is a means. They use that for torture, and I can tell you, newborn babies are absolutely ace at torturing their mothers. As I said, I'm not going to be back on air now. I'm going to pass you back to David. He's got the price action that he's looking at on his side. Enjoy the rest of the trading week, and I will be back, and David will be back next week. So don't go away. I'll pass you back to David.
Just going to switch over screens again, back to Ninja. I've actually moved over onto the tick charts. So this is NQ, staying with the NQ. I've just got the tick charts up, and just seeing a little bit of a reversal coming in, and see if this will gather some strength. Unfortunately, when we look at the 3 minutes, certainly it's pretty sluggish in terms of participation. This is red. This should be either orange or green. There's a little bit more on the 1 minute, but certainly the 3 minute and the 5 minute pretty sluggish at the moment. And certainly the tick values that we're getting off the tick speedometer indicator are a little bit sluggish right now. So again, it's just highlighting the fact that this is tough going. It's not easy. The indicator is working exactly the same way. You can see we've got the volume point of control. We've got support and resistance building here, which is actually being hit as I'm talking. These two levels here. Having said that, if we break through that region, through onto 70, maybe up to 75, the volume's falling away. Price resistance become less important, less severe, and maybe we'll get a move to the upside. Obviously, we'll be looking at the volume profiles associated with that move, which we don't have on the tick charts, obviously, which is part of the reason we developed the tick speedometer, to give us that blend of volume. The advantages are obviously a volume price analysis methodology, but the advantages of trading on a tick chart, which is independent of time and therefore delivers momentum of price action, which you never see on a time-based chart. Speaking of which, let's just want to call in on gold again. Where are we? That one, I think. There we are. Okay, so we're still trading in that very tight range that I highlighted. In congestion, That's what we expect. But if the market breaks to the upside and breaks through this really nice ceiling here, then you've got a decent move going with some very nice protection in below for an extended move to the upside. And part of that will obviously depend on what happens with the dollar. If the dollar rolls over, that will certainly help. It's coming off, what time frame I've got that on? That's on 15. So,
Sergio says, could you have a quick look at oil?
Could I have a quick look at oil? Yes, most certainly. I have a quick look at oil. That's had a decent day, I think. Let's have a quick look. That's we're on the January contract. There we go. That's there we are. That's on the daily. Top line. Sorry, I've just got this is gold again below down here, but I've got the oil up here. This is on the 1 minute. This is on 5, and this is on the daily.
Is it going to have a trend?
It's been very much in congestion oil for some considerable time. A lot of people quoting it going to, I don't know, $40, $45 a barrel, that sort of type of thing. It's starting to break higher, and certainly from a technical perspective at any rate, this level was pretty important. It looks as though it's going to close above that, certainly in trading today with a bit of luck. Let's just pull that back. But it's been pretty much congestion, but in a very wide range. So looking at that from purely from a technical perspective, so if that breaks through this region, closes above here today, decent volume. This is volume is building. It doesn't look particularly strong, I have to say, but there's an awful lot of factors other than the technical perspective. But nevertheless, the chart is a chart. It's exactly the same. You know, there's traders will be happily making money hand over fist here, trading oil. Absolutely nothing to frighten the horses at the moment in terms of the uptrend. You can see the strength of trend monitor holding you in nicely, breaking away from the volume point of control now. This was obviously we had volatility triggers here, went into congestion, then we start on up the next one, good strong volume under that, but again volatility, but nevertheless the market's continuing, but you've got the congestion to contend with. Then we're up to the volume point of control. Now we're starting to climb higher, decent volume under here, bit of support coming in onto that candle and the next one. The trend monitor, as I say, bright blue throughout. We've only had a minor transition in color here, and the trend line is still helping to keep us in. So that's on 5 minute. So traders will be quite happy with that one, and certainly if the dollar starts to sell off from overbought, then that will certainly help commodities, certainly from an intraday perspective at any rate. But again, it brings back this whole issue of what you've got to be aware of as an intraday trader. We're looking at the 1 minute, using multiple time frames. What have we got? We've got volatility. If you're only looking at the 5 minute chart in isolation and you're not aware of what is going on in other time frames, you won't see this. Now what you're expecting is congestion on the 1 minute, which is at the very least going to hinder progress on the 5 minute. Moreover, we've also got a wick to the upper body. We've got a ton and a half of volume coming in under that particular candle. That is not a strong signal. It's a sign of potentially reversal or potential weakness at any rate. So there's decent selling coming in there. No great surprise given the rally. There'll be sellers taking their profits off the table there. But there's weakness ahead as far as that's concerned. And you've got it also signaled over here in terms of the volatility candle or the volatility trigger here. Just keeping an eye on what's going on gold below. So that's oil. Just go back onto the indices again. Where are we? Multiple time frames. Bang, that one. See what's going on. Okay, we've had a volatility, similar sort of situation. We've had a volatility trigger on 15-second on the index, on the NQ. Loads of volume coming in. What are we expecting? Congestion to build, which is what it's doing. If it's going to break away from there, that's fine. You've got to wait for it to clear. But if you go up to the, let's get rid of that. If you go up to the 2 minute, where are we? We're at the volume point of control. So, is this market going to roar up? Probably not. We've also got a doji candle of indecision. We're at the volume point of control. We're in the heaviest concentration of volume. So it's going to be a grind from here. If it's going to grind higher, that's fine, but it's going to have to see some decent volume. Just checking over on the interactive side, on TradeStation rather, which is driven by interactive. Doing the same thing there, obviously. So again, it comes back to where I started, which is if you're going to jump into any of these markets at any point, you've got to be aware of all the barriers to the price action, which are going to cause a problem to you. And it's a question of deciding how much opportunity is there in this trade. If there's enough, fine. If there isn't, don't take it. It's as simple as that. If there's only 3 or 4 points in there and you're not comfortable with 3 or 4 points or 5 pips or 10 pips or whatever it may be, you just have to pass up the opportunity. It's as simple as that. And it's using the chart and the indicators to give you all that information, which will help you to make those all-important decisions in terms of trading. And thereafter, it's a question of whether you want to be a reversal trader. Do you look to get into positions and maximize profitability from a trend, or are you one of those people who's more comfortable getting into a trend once it's underway, which is perfectly fine. There's no right or wrong way to trade. And then it's the question of taking those tactical approaches. Are you going to look for breakaway trades? Are you going to look for reversal trades? Are you a trend trader? Are you longer term? Are you faster? Are you going to be trading many, many times a day? Do you want to trade slower time frames, be more of a swing trader if you like? There's all those sorts of factors. And are you going to take one tactic to market? Are you going to take a single tactic to multiple markets, or are you going to take a bunch of tactics to one particular market? So you might become a specialist, for example, in oil, but you might have a bunch of tactics that you apply. Alternatively, you might have one tactic, but you apply it across the market. You have to decide all these things. It's finding what works for you, what you're comfortable with, what you enjoy doing. Because if you don't enjoy doing it, you won't be successful. You have to enjoy this. I accept you have to lose money. Of course you do. Everybody does. There's no trader on the planet who hasn't lost money and stayed in this business longer than 5 minutes. You have to lose money. It's part and parcel of winning. And if you can learn to lose and learn to accept it and not reflect on it and just get on to the next one and not take it personally and not try to revenge trade and all that stuff that is perfectly understandable. It's all an emotional response. You don't like losing. Nobody does. But it's a fact of life in this business. You have to lose. Learn how to lose comfortably, and move on to the next one, and just put it down. That's just a fact of life. That's part and parcel of trading. Sounds a bit harsh maybe, but it's a fact. And you have to have enough money to be able to lose comfortably. If you're trading on a shoestring and you don't have enough money in there that you have to constantly having protected all the time, then it's going to make it very, very difficult for you. We've all learned, we've been doing this for 20 odd years, so you kind of become, you accept losses and profits in much the same way. And once you arrive at that mental state, then I'd say you've kind of arrived as a trader, because you don't really, say you mind not losing money, but it's just a fact of life, and it's the same as winning. You're not euphoric when you win. You think, okay, fine, I had a winner, good, on to the next one, because the next one might be a loser. So what's the point in being euphoric about it? It's just, that's how you have to be. You have to be evenly tempered, win or lose. Not going to go very far this one, I'm afraid. Hitting the VPOC all over the place. Got the same on TradeStation. Just pull that over. There we go. Come here. That's it. Up onto the volume point of control there as well. So it's just flip-flopping around. Where's the VIX? There we go. The VIX is coming off a little bit, but even that, it's very, very tight. This is the daily. Here we go. We've got, a doji candle forming, so it's up and down, up and down. No real strong direction one way or the other. Just have a look on, I think we'll have the euro dollar up here. Yeah, there's some decent selling on that. It's come off a bit now. Out of the way. There we go. Let's go and see if anything's going on in gold. It's been tough. I made the comment in the chat box. It's been a tough week. This has not been the easiest of weeks to make money. We'll make money, we'll lose money. It's simple as that. And on balance, you just try and make sure that you win more than you lose and move forward. But some weeks you don't. You just have to move on and take it on the chin. And next week will be hopefully a better week. Well, this is a really nice example. This is the sort of chart that I would have my eye on now, because for various reasons, when the markets, I'm always looking for congestion phases, because from congestion comes trend. and the reversals take place, or continuation. But when you're looking at something like this where it's channeling and you've got this very, very clearly defined level through here, if that market breaks to the upside, then I'm on that like a hawk, because you've got so much protection below you. You've got the volume point of control, you've got this one here which is very strong, you've got another one here which is strong as well, you've got two more in here, and you've got this one here. So you've got five or six very, very strong regions in a pretty tight range. That's only $2.5 to $3 an ounce. So if the market breaks to the upside and you've got this great wedge of stuff below from a technical perspective, which is going to act as a support platform and protection for you getting a position in the market, then that's the sort of thing which is invaluable, and that's the sort of channels that you would look for. And this could be anything. This could be a 1 minute, could be a 15-second, could be a daily, anything you care to name. The principle is exactly the same. When you get these very tight channels, and it all goes back to Wyckoff, because it's all down to time. The longer a market stays in a range or a region, then the greater is likely to be the resultant development of a trend or a reversal, purely because you've got the time aspect to it. It's like the analogy I've used many times is like a clockwork toy. You wind it up, you're winding energy into that spring, and when that spring if it's fully wound, then when that toy is released, it will go a long way. And it's exactly the same principle here. It's time. It's the key to everything. The longer things are in congestion, the longer things occur, then the greater will be the actual net result once it starts to unwind. Let's just go back to the three indices again. I'm sure they're all doing the same thing. Occasionally you do get divergence, not very often, but we do see it here from time to time, where you'll get one index is maybe moving higher and the others moving lower, or vice versa. But not a great deal going on, I'm afraid, there. And it's just a question of waiting and being patient. And it may stay there all day. But then equally, as I say, at when was it, 6 o'clock last night, or 6:30, something like that, our time, there's a war of words breaks out. There's a spat. The market reacts. There's a big move to the downside, and then you've got an equally big move to the upside. And it's a question of jumping in as those moves develop, but accepting the fact that it's been triggered by not an item of fundamental news, but purely by the market reacting to something that was said, and the prospect of that lasting very long is very small, and therefore what you're looking at is to grab the opportunity and then wait for the reversal to develop, which it almost certainly will. As I say, it's what we call the souffle effect. We've seen it hundreds of times in Brexit with all the news flow over the last 2-3 years. Market jumps and then deflates, or vice versa. Again, you might ask why. Well, it's very simple, because the market makers are in here every single second of the day, and they are playing in this business, and they know exactly what they're doing, and they will use every mechanism they can, and that's one of the simplest. We've literally just gone through the London fix, which was 4 o'clock, so if you were trading Forex, certainly in the run-up to that, 3:45. There have also been some very big option expiries today as well across the piece. So from a Forex perspective, again, you have to be aware of all this stuff, and just factor it into whatever it is you're doing. I know some of our traders, they like to trade through the London fix, absolutely spot on. Just gives an opportunity for making money. It's another of the events which occur throughout the 24-hour session, and pretty much every market is 24-hour. Globex is 24 hours, so there's an index trading literally 24. It's not quite 24/7, but almost, because it closes to settle the books, but essentially it is pretty much 24/7. So there is always a market open for sentiment, whether that's a cash market somewhere around the globe or whether it's electronically. There's always sentiment that you can tell what the market is feeling and reacting to every single item in news and what's said, literally on a second-by-second basis. Just going to wrap up, just see where we're going, see if we can get a breakaway here. But again, you can see, falling volume, you've got selling here, but you've got candles falling. But as I said earlier on, if this market is going to go far to the downside, then these should be rising like this and not falling away like that. So the actual selling pressure is pretty lightweight. but there's not much buying either. It's a lackluster market right now, and it's all signaled by the volume point of control here, which is where we're trading at the moment. So there we go. Just to highlight the indicators, where are we? If I've got them up here. This is the Forex program. I appreciate this is much more to do with futures and indices, but it's the Forex, the complete Forex trading program, which covers a lot of the things, the principles I've been talking about. While it's specific to Forex, the actual methodologies that we teach here are universal to all markets. This is where you can find the indicators, quantumtrading.com. Sorry, this is the MT4 version, but basically, if I go to the home page, that'll be all the indicators there for all the various platforms. We've got NinjaTrader, we've got TradingView, we've got MT4, MT5, and as I say, we're working on TradeStation at the moment. You can buy one, you can buy a bundle package. There are lots of deals, special deals. And remember that if you invest in the complete package, then you also get all the future indicators we develop free of charge. You can transfer licenses from one platform to another. We don't charge you for that. It's just part and parcel of what we do. So if you started with MT4, MT5, or you have the indicators for MT4, MT5, and you want to move to NinjaTrader, absolutely fine, no problem at all. We don't charge you. We just make that happen for you. That's what we believe in. We don't believe in charging you again for something you've already paid for. And that applies across the platforms. So it will apply to TradeStation. So if you have NinjaTrader and in the future you want to move to TradeStation, absolutely no problem at all. It includes 24/7 support. It's literally 365 days of the year. We answer emails at the weekend, believe it or believe it not. That's the way we've always done it, just the way we believe it should be done. So it's 365 days support. And it also includes all upgrades and all enhancements to the indicators. You only pay once, that's it. Then you've got them for life. It's as simple as that. If you want to drop us a line, I'm happy to take questions from you, or if you just want to get in touch, it's david@quantumtrading.com. If you want to get hold of Anna, it's anna@annacooling.com. And if you have questions on the indicators themselves, then please drop the guys on help desk. They will be more than happy to help you. That's helpdesk@quantumtrading.com. Just make sure we haven't got any more questions. Thank you, David. Yeah, you keep warm too. Hope the fire's working well. Thanks, Sergio. You're very welcome, and I hope that helps on oil. We will be back next week, usual time for the London session at 7:30 UK time, and then we'll be back here at the usual time for the futures session. So thank you for coming along today. I hope you've enjoyed it. We do appreciate you taking your time to come and listen to us and just check out what's going on. So we will see you again next week. Anna's waving goodbye. Thank you so much, and bye for now, and enjoy the rest of the trading day, the rest of the trading week, and have a great weekend.